Hi friends, I am CA Pritish Burton. Welcome back to my YouTube channel. In this video, we are going to talk about stock markets. In case if you do not know anything about stock markets or in case if you have no idea about the stock markets at all, then I am going to explain in simple terms what is a stock market and the entire stock market process so that it becomes very simple for you to understand. The majority of the net worth of an average person like you and me is in the form of the home or the house that we are living in. But in case of very rich and affluent people, they pile up their net worth in the stocks or share markets. Have you all heard of Warren Buffett or Rakesh Junjunwala in India? They have built their wealth, massive wealth, only through the stock markets. So it is very important for you all to understand the entire stock market process and invest in good quality stocks. Be very disciplined and do not panic. So in this video, we'll ensure that you understand the stock markets completely so that it becomes for you and me to invest in the stock markets, because Rakesh Junjunwala was also a very average person like you and me, but he built their wealth through a disciplined manner. So friends, in order to understand the stock market, we need to know what are shares. Shares represents the ownership in a company. Say for example, there are 10,000 shares in a particular company and you buy 1,000 of them. You become the 10% owner of that company. Now, how do you buy these shares? When a private limited company goes public for the very first time, it sells its shares to the investors like you and me through a process called the IPO. IPO means initial public offering. That means the shares were never traded before in the stock markets, and this is the first time that these shares are offered to the investors for investment. Now, why does a company needs to go from private to public, or why does it need to sell its shares? For the very simple reason that instead of borrowing from the banks at a higher rate of interest, when the company is scaling up its operations or expanding its business, it can go to the shareholders like the investors and ask for money, because there is no interest to be paid, only the ownership is given to the shareholders. Now, when the IPO process is complete through the primary market, there is something called the secondary market, that is itself the stock market, which is our main focus. Stock market is a place where the shares of thousands of companies that are listed on stock exchanges are traded actively, that is bought and sold on an everyday basis. There are two major stock exchanges in India. One is the National Stock Exchange or the NSE. The second one is the Bombay Stock Exchange or the BSE. We hear that the Sensex has touched 50,000, the Nifty has touched 15,000. What does this mean? When there is an increase in the Sensex or the Nifty, does it really mean that all the stock prices have gone up? The answer is a flat no. The Sensex comprises of 30 top companies, whereas in case of Nifty, there are 50 companies. When the prices of these 30 or 50 companies move upward or downward, the Sensex and the Nifty also moves upward or downward accordingly. Does the stock prices move up or down? In case if the buyers are more, then the prices move upwards. In case if the sellers are more in a particular stock, the prices come down. It is basically the demand and supply for a particular stock decides the prices. The next question is, can you trade in the stock markets at any point in time? You get up at night and say that you want to buy a particular stock. Is that possible? The answer is no. There are timings for the stock markets when the shares are traded. The market opens at 9:15 in the morning and closes at 3:30 in the evening. The stock markets are open from Monday till Friday, whereas Saturday and Sunday, the markets are closed. What is the process of buying and selling of shares? How do you buy and sell the shares that are traded in the stock markets? The answer is through a demat account or a dematerialization account. Earlier, the shares were traded in physical form. You had physical certificates. Now it is no longer in existence, but you have to open a demat account just like how you open a bank account. There are so many brokers like Zerodha, Angel Broking, ICICI Direct, HDFC Securities, and many more. You open a demat account and buying and selling of shares becomes very simple with just a click of a button. The process of opening a demat account is very simple these days, but ensure that you get the right broker and right brokerage. So first you need to do your homework properly and choose the right broker. There are so many videos on YouTube, and then you can even Google and find out which broker is the best, and then you can choose your plan accordingly. The next is the most important question. How do you become rich through the stock markets? You find so many videos on YouTube and so many other places, people giving you advices. Invest in the stock markets to become rich. So is that possible? The answer is yes. Then how can we do it? Buy at a lesser price and sell the stocks at a higher price is the answer to this. Now, who is a stock investor? A stock investor is a person who invests in stocks of companies with an intention of staying invested for a longer period of time. His main intention is capital appreciation and not short-term profits. Whereas a stock trader is a person who trades in the stocks rather than investing. His intention is short-term profits. He buys and sells shares in the same day or within a shorter period of time. He does not wait for capital appreciation, but his main intention is booking the profits within a shorter period of time. The last question that you need to understand is that whether you will be taxed when you sell shares. The answer is both yes and no. In case if you sell the shares within a period of 12 months, it is called short-term capital gains, and short-term capital gains are taxed at the rate of 15%. Whereas on the other hand, you do not sell the shares within a period of 12 months, you sell it after 12 months. It is called long-term capital gains, and long-term capital gains are taxed at the rate of 10% only when the gain from your investment is more than rupees 1 lakh in the previous financial year. Now the next question is, which is a very recent update, whether dividends are taxable in India. Dividends were not taxable in the previous financial year, but from financial year 2021, the dividends are taxable in India. In case if you guys do not know what is dividend, when a company decides to distribute its profits or surplus to its shareholders, it does it in the form of dividend. So friends, in case if this video has enhanced your knowledge in stock markets, please share and subscribe. I'll be doing more videos on stock markets and various other interesting topics. So keep watching and happy investing.